Welcome back to the deep dive. Today we are jumping straight into the engine room of this massive AI revolution.
We really are, the semiconductor sector.
Exactly. If you want to understand the foundational tech that's powering, well, everything right now and where the huge profits are coming from, this is the deep dive for you.
It's the absolute core of the modern economy. And the data we're looking at, it shows a period of extreme, almost, unprecedented growth.
Right.
It's an industry that demands critical attention because, while the returns have been monumental, so has the volatility. The market is pricing in perfection.
That's a great way to put it. So our mission today is a deep analysis of the top 3 companies in this space by market cap. We're talking NVIDIA, Broadcom, and Taiwan Semi.
Yes, Sam. Yeah.
We're using a data snapshot from November 24th, looking at performance, technicals, news, the whole picture. Think of it like an expert journalistic report.
And just as we get started, it's important to mention that, everything we discuss here, performance, financials, all of it, it's purely for educational and analytical purposes.
Of course.
We're just reporting on the data we have, not offering any kind of investment advice.
Absolutely. Now, for the fun part, we have a little paper money math challenge for you running through this whole deep dive.
I like this part.
As we break down each stock, try to calculate the hypothetical profit you'd have made if you had invested exactly $5,000 at that stock's 52-week low. It's a great way to really visualize the scale of this bull run. Okay, let's kick things off with the reigning monarch of the AI chip world, NVIDIA. Stock ticker NVDA.
The king.
A market cap soaring up to $4.43 trillion. Their dominance is, it's all about their graphics processing units, their GPUs.
The essential hardware. You can't train or run these massive AI models without them.
So what do the financials look like?
The financials for NVDA don't just look good, they look historic.
Yeah.
When we talk about capital efficiency, how well a company turns shareholder money into profit in NVDA is on totally different plane.
Okay.
We're seeing a return on equity, an ROE of 107.36%.
Wow. Over 100%. So
Yeah.
for our listeners, what does that actually mean?
It's massive.
Yeah.
It means for every single dollar of shareholder equity the company uses, they are generating over $1 in pure profit. It's this incredible self-reinforcing financial flywheel.
And that operational skill translates into huge profitability, a profit margin of 53%.
Right.
But let's talk about the elephant in the room, valuation. Their price-to-earnings ratio, the PE, is high at 45.21. That feels expensive.
It is high. And the market justifies that price tag with one thing: projected growth.
Okay.
That's why we look at the PEG ratio, the PE divided by the expected future growth. NVDA's PEG is super tight at 0.97.
And a peg below 1 is generally considered attractive, right?
Exactly. Even with a high PE, it means analysts are projecting the company will grow so fast, we're talking an estimated 46% EPS growth over the next 5 years, that it will quickly catch up to its current price.
And the recent numbers back that up.
Oh yeah. Their quarterly sales growth jumped 62%. The market truly believes this engine is just getting started.
But despite those impeccable financials, the stock itself is not for the faint of heart.
No. The technical scream volatility.
Its beta is at a high 2.3, so it moves more than twice as much as the overall market.
On the day we took this snapshot, the stock was at about 182. But the 52-week range tells the whole story. It goes from a low of about $86 all the way up to $212.
That's a huge swing.
And we also saw some short-term pressure. The RSI, the Relative Strength Index, was neutral to maybe slightly weak, and performance over the last week and month was actually negative.
So some profit taking.
A cooling off period.
You expect that when a stock climbs this high, this fast.
Now, the news triggers are fascinating, a mix of risk and opportunity. On the risk side, we're seeing articles suggesting that, big wins for Google in the AI race could be bad news for NVIDIA stock. Right, because Google might lean more on their own custom chips, ASICs, instead of buying NVDA's expensive GPUs. That's the threat of vertical integration from your biggest customers.
And on the other side?
Geopolitics.
Right.
Reports that the U.S. government is thinking about allowing the sale of advanced H200 chips to China. That is a massive potential market, a huge piece of news-driving sentiment.
Okay, let's pivot to corporate confidence. What's the insider activity look like?
It's highly visible. We saw continuous high-volume sales from the CEO, Jensen Huang, routinely selling blocks of 75,000 shares throughout September and October.
So leadership is cashing in.
They're actively realizing gains, which given the stunning rise, could just be prudent diversification, but it always makes you ask if they see a ceiling on these valuations.
A very good question. Okay, time for our paper money math on NVDA. If you had taken $5,000 and invested it at the 52-week low of $86.62
You would pick up about 57.72 shares.
and holding those shares until the current price of 182.55 would turn your initial 5 grand into $10,534.
Giving you a theoretical profit of $5,534.54.
That's a 110% gain, a phenomenal start. Let's see if our next one can top that. Next up, we have Broadcom, ticker AVGO. Now, this company is more of a dual threat. It's in semiconductors, but also major infrastructure software.
Right, everything from mainframe to cybersecurity. So it has a slightly different market profile, still a massive $1.78 trillion market cap.
So how does its financial profile stack up?
Well, AVGO is driven by aggressive momentum and acquisitions. The gross margin is superb, over 63%. But the valuation is significantly higher than NVIDIA's.
Higher. How so?
The PE ratio is at 96.56, and the PEG ratio sits at 2.65.
Okay, that 2.65 PEG is key. It's way higher than NVIDIA's sub-1 figure. What does that signal to us?
It signals that AVGO is currently priced at a significant premium relative to its projected earnings growth. The market is trading this stock more on sheer momentum and the promise of these dramatic catalysts rather than a sustainable growth rate that justifies the price on paper.
And that brings us to their growth numbers, which are, well, they're just explosive. Their quarterly earnings per share growth, quarter over quarter, soared an astonishing 311%.
Yeah, a number like that demands a closer look. A surge that dramatic is typically the result of a major acquisition, like their VMware integration, or the huge impact of new, highly profitable custom AI chip contracts.
Those ASICs you mentioned.
Exactly. Tailored for huge clients like Google. That one metric is really the engine driving all the recent enthusiasm.
And the technicals absolutely reflect that explosion. The stock closed at 377.96, gaining 11% on the single day we analyzed this data.
A monumental one-day move for a company this size. The whole technical setup was highly bullish. Up over 10% for the week, nearly 27% for the quarter.
And trading very close to its 52-week high.
Very close. The RSI was strong at 61, which shows serious buying momentum, but it's also approaching that overbought territory where things might cool off.
And the news really explains the surge, right? The market reacted heavily to good news about Google's AI success.
It's a direct boost to AVGO's outlook as a primary ASIC supplier. That direct connection to the underlying AI infrastructure is just, it's so highly valued by the market right now.
We also saw reports that Broadcom's market cap lead over Meta had widened to its largest gap ever.
That reinforces the narrative. The market is rapidly shifting capital away from, say, consumer-facing social media and into the foundational infrastructure provided by companies like AVGO.
And what about insider confidence here? Do we see a similar pattern to NVIDIA?
Yes, very similar. Widespread insider selling. The CEO, Tan Hakia, sold 100,000 shares in September. Numerous directors were selling multiple times in the months before that.
Another case of leadership realizing massive gains while the stock is near its peak.
It's a crucial point of contrast when we get to our final company.
Okay, let's run the paper money math for Broadcom. Investing $5,000 at the 52-week low of $138.10.
Would have secured you about 36.21 shares.
And those shares, held until the current price of $377.96, would now be worth $13,681.
Which means a profit of $8,681.76, a gain of 173.64%.
So Broadcom, driven by that dramatic quarterly surge, is now the leader in our hypothetical challenge. All right, finally, let's turn our attention to the essential global manufacturer, Taiwan Semiconductor Manufacturing, or TSM.
The critical foundry. They are the single most important supplier that actually manufactures the world's most advanced chips,
including the ones designed by NVIDIA and the others, and they hold a $1.47 trillion market cap.
And TSM offers a significantly different financial profile. It's arguably more stable, more appealing from a traditional valuation standpoint.
How so?
Well, their PE ratio is the lowest of the three at 29.17, and their PEG ratio is highly attractive at 0.96.
Nearly identical to NVIDIA's.
Exactly. It suggests the market expects their projected 30% EPS growth over the next 5 years to fully justify their current price.
And their profitability is still tremendous, a profit margin of over 43%. And it's a good consideration for investors looking for income.
Right. TSM offers the highest dividend yield of the top three at 1.14%, with a very comfortable payout ratio.
And their quarterly sales growth was still extremely robust at over 40%.
Technically, TSM shows a very solid long-term trend, up over 50% over the last year. The 200-day moving average is strongly positive.
But we did see some near-term weakness.
A little bit. Performance over the month was down about 3.5%. This volatility, though, it reflects the geopolitical sensitivity around the stock more than any operational concerns.
And that geopolitical sensitivity is the defining characteristic of TSM, isn't it?
It absolutely is. The sources confirm TSM is the critical manufacturing bottleneck in the AI supply chain. Demand is essentially guaranteed. This is driving a huge long-term outlook.
We saw some analysts predicting TSM could be worth more than Apple by 2030.
You have to pair that bullish outlook with the risks, though. We saw news reports mentioning political figures discussing Taiwan, which just underscores that TSM's entire operation is tied to international political stability.
That risk is definitely factored into its slightly lower valuation compared to its U.S. peers.
No question.
So let's revisit that key metric we've been tracking, insider activity.
And this is where TSM is the absolute outlier.
Oh.
Insider transactions were negligible, listed at 0.00%,
Yeah.
zero widespread selling from leadership.
Wow.
It's a complete contrast to the significant profit-taking we saw at both NVDA and Broadcom. It suggests a fundamentally different approach to corporate confidence.
That is a fascinating difference. Okay, let's finalize the paper money math for TSM. A $5,000 investment at the 52-week low of 134.25.
Would have gotten you 37.24 shares.
And held until the current price of $284.64, that investment would now be worth $10,601.
Giving you a theoretical profit of $5,601.55.
A 112% gain, just confirming the incredible performance across this entire sector. So, let's synthesize these findings. All three companies delivered spectacular paper gains. The opportunity in the AI boom is just immense.
It really is.
Broadcom, AVGO, was the theoretical winner in our paper money math with that 173% gain, thanks to that unprecedented quarterly EPS surge and its key supplier role.
But NVIDIA and TSM both delivered incredible gains over 110% as well.
So what's the common thread?
The common thread is the immense tailwind of AI. It's reflected in those strong growth projections, all of them expecting EPS growth over 30% for the next 5 years, and phenomenal profitability.
But the differences matter.
This is where they matter most. While NVIDIA and TSM look relatively attractive on a PEG basis, AVGO is clearly trading on sheer momentum at a high premium. You are buying volatility and high expectations across the board.
And I think the most important takeaway is the difference in insider behavior.
Absolutely.
We saw significant insider selling, major profit-taking in both the U.S.-based NVIDIA and Broadcom during this boom, yet the global manufacturer, TSM, showed virtually no insider transaction activity.
And given the immense rapid gains we just calculated, that disparity is the key strategic question for you to think about. Does that widespread selling in the U.S. peers indicate, a prudent profit-taking by leadership who see the market getting ahead of itself?
Or does the lack of selling at TSM suggest a stronger long-term belief in the sustained valuation and strategic positioning of the company? It's a critical difference between a strategic holding and a strategic exit.
Definitely something to explore as you continue your own deep dive.
Until then, stay curious and keep tracking those signals. We'll see you next time.